Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is December 5th, 2023. This is the Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. Looking at the euro versus US dollar on the daily chart, the price action today is up and down above and below the 200-day moving average. That's the green line in this chart. Comes in at 1.08205. And as you can see in trading yesterday, the price moved below it and then closed above it. And trading today, the price traded below it and then is currently trading just around it, just a little bit below it, as a matter of fact, at 1.08174. The low price in trading today was near the low price from yesterday, so there is some support against that low, and that low also came against the high of this swing area. This swing area is defined by a number of different swing lows and swing highs going back in time through here, here. We sort of based against it here and here, move below it here. You can see the number of different times that the market came into this area and found either support or resistance. And that also in the area is the 38.2% retracement at 1.0764 and the 100-day moving average at 1.0774. So lots of stuff in between the 1.07509 and 1.0805. It's about 55 pips, so it is a little bit wide, but you can see the cluster of support that this pair is moving down into, and the high of that cluster seems to be doing a stall around the 200-day moving average. So let's take a look at the hourly chart, see if there's any other clues from it. And if we take a look at the move up from the November or end of October low right here to the high price that we saw just last week, the 38.2% retracement comes in at 1.08252. That's also near the 200-day moving average, and like the price action around the 200-day moving average, it too has been disrespected a bit. We did try to hold support in trading yesterday trading today near the low and moved to the upside, but I couldn't sustain that, and we've been trading above and below that 38.2 and then 200-day moving average right through here. So this area still, although it's been disrespected by the price action in trading both yesterday and today, it still remains a key barometer for both buyers and sellers. If the price can move with more momentum to the upside, that's more bullish. If the price stays below this level, then it's more bearish, and we look down toward the 100-day moving average. It currently comes in at 1.07745. Also, the 50% retracement of the same move up from the October 31 low to the high price that we saw in last week's trading would also be on target at 1.07766. So just watch this area right here. Try to use the 38.2 to 200-day moving average as a barometer for bearish below, bullish above, and I think it'll serve you well in trading here today. Let's take a look at the dollar versus yen, and if we look at the daily chart of this, the move up from the low price in July to the high price that we saw in the month of November comes in at 146.304. In trading yesterday, the price came down toward that level and found some support buyers against that area. So that is the support on the top side in trading here today. You can see how the 100-day moving average came in at 147.3327, and that's going to be resistance in the short term off the daily chart. Let's drill down to the hourly chart. When we look at the hourly chart, we can see the resistance against the 100-day moving average here. That's a step line right here, this lower blue line. Now, also in play is this smoother line, which represents the 100-hour moving average. As you can see, both of those moving averages are near converged at 147.32. That's going to be a key barometer on the top side. As long as the price remains below that level, the bias remains more to the downside. If it moves above it, then we should see some further upside momentum up toward the 200-hour moving average at 148.04. We did have Tokyo CPI come out, which was a little bit lower than expectations, but still above the 2% level. That helped to kick the dollar versus yen to the downside, higher yen. But as you can see, we've since rebounded back to the upside. The high price in the corrective move to the upside did get above the 147.14 level. 14.7 level, I should say. That level corresponded with this swing low going back to November 21. But you can see it was just little moves above that level before the market rotated to the downside. Watch that level in the short term ahead of the 2 moving averages here to keep the bearish bias more intact on the downside. Watch this level right here at 146.65. That level corresponded with the swing low from this day right here. I guess that's November 29th. And also a swing low from last Friday's trade near at the same level. In trading yesterday, we traded above and below that level. In trading here today, we did find support against it. So breaking below that level would increase the bearish bias, and after traders looking toward the low price from yesterday's trade. Finally, let's take a look at the sterling versus US dollar. I'm just going to go right to the hourly chart because it's going to tell the story from a technical perspective for this currency pair in the short term, at least. You see all these different lows right through here. This helped to form a floor for the pair before moving to the upside, and then we came right back down to it and found the floor and moved to the upside, and then we came down to it yesterday and found the floor and moved more modestly to the upside. And in trading here today, we came down to the top of the floor and found support again and moved modestly to the upside. So there is a floor area between the 125.89 and 126.02 that, if broken, would increase the bearish bias and have traders looking more in this direction toward the 38.2% retracement of the move up from this low to this high right here. That 38.2% is always the minimum retracement target that I like to look for, and after a trend type move like we saw through here. But first things first, the price needs to get below this swing area to increase that bearish bias. In between the high prices today and the swing area down here is the 200-hour moving average, which, as you can see, is being disrespected with the price trading above and below it and trading here today. It did the same thing yesterday. If the price were to move back above that 200-hour moving average and move back above the 100-hour moving average, that would be more bullish for the sterling versus US dollar. So there you have it. A look at 3 of the major currency pairs to kickstart your Forex trading today. My name is Greg McGlosky. Good fortune with your trading. Bye-bye now.